Electronic signatures are not just a legal checkbox. They shape trust, customer friction, evidence, and growth. In this topic, we'll translate eIDAS 2.0 into practical decisions for products, processes, and risk-aware roadmaps. We've covered the regulatory foundation of eIDAS 2.0 and the identity and trust services ecosystem it enables. Now we'll connect that foundation to business choices, managing risk, meeting compliance obligations, and designing usable products. From there, we'll be ready to compare SES, eIDAS, and QES in practice. Signature strategy is a business decision. Too much assurance can slow customers down. Too little can weaken evidence and trust. Under eIDAS 2.0, the goal is to balance growth, usability, compliance, and risk. Electronic signatures appear in many different workflows, and the risk is not the same in each one. A quick customer consent may only need a smooth experience. Employee records need a clear audit trail. Loans, procurement, and government services often require stronger identity checks because the transaction value, legal exposure, or regulatory scrutiny is higher. In onboarding, every extra step can reduce completion, but weak consent can create risk later. A strong flow keeps routine actions simple. Create the account, review the exact terms, and accept or sign in a clear moment. For higher-risk products, identity checks can be added before or during signing. The evidence package should capture the timestamp, user action, document version, and consent language, so teams can improve completion while still defending the agreement if it is disputed. Employment documents usually follow a repeatable path. Prepare the document, send it for review, approve it, sign it, and store it with evidence. The goal is not just to collect a signature. It is to prove the right person acted under the right authority at the right time. For contracts, NDAs, policy acknowledgements, and HR forms, product choices should reflect volume, sensitivity, workflow control, and how strongly the record may need to stand up in compliance reviews or disputes. Financial transactions vary widely in risk. A simple account update may only need basic authentication. A loan contract, credit agreement, investment document, or payment mandate creates much higher exposure. As value and consequence increase, assurance should increase too. That means stronger identity verification, stronger electronic signature evidence, and audit trails that show who signed, what they saw, and when. The signature approach should connect directly to risk scoring, customer due diligence, regulatory expectations, and fraud prevention. Procurement signing is rarely just one person clicking approve. A purchase order or supplier contract may require business review, finance approval, supplier acceptance, and a trusted signature service to bind it together. The critical controls are authority and evidence. Confirm the signer can commit the company, capture each approval and version, and preserve the signing sequence. That turns a routine procurement document into an enforceable, traceable agreement across both organizations. Public services raise the stakes for signatures. A permit application, tax filing, healthcare form, or benefit request may affect legal rights, money, or access to care. These workflows often combine identity verification, a signature, audit evidence, and legal assurance. Digital identity wallets can help connect those pieces, especially across borders. The design also has to work for everyone, so accessibility and inclusion are not optional extras. They are part of trustworthy public service. Every signing choice balances convenience against evidence. A simple consent checkbox may be right when the risk is low and speed matters. As value, regulation, or dispute risk increases, stronger identity checks and better audit evidence become more important. Too much security creates drop-off and support cost. Too little creates fraud and legal uncertainty. The right signature method matches assurance to the real risk. Treat signatures as a control, not a default feature. For each workflow, assess what could go wrong: sensitive documents, high transaction value, weak identity signals, or likely disputes. Then choose the lightest assurance level that still manages that risk, from a basic e-signature to stronger authentication, digital ID, or biometrics. Capture the rationale so legal, compliance, and audit teams can defend it. Revisit the model as products, regulations, and fraud patterns evolve. Legal defensibility comes from the evidence package around the signature. A timestamp shows when the act occurred. Identity data, device context, and authentication show who likely signed and how they were verified. Integrity controls, such as hashes or tamper seals, show the document was not changed afterwards. Keep these records as long as required by law and business policy. In general, stronger signature methods create stronger evidence if the transaction is challenged. A signature strategy works only when each team owns the right part of the decision. Product protects the user journey and conversion. Legal and compliance define enforceability, regulatory expectations, and acceptable risk. Security and engineering validate identity controls, integrations, data protection, and resilience. Executives and procurement connect the choice to vendor fit, budget, strategy, and accountability. The goal is alignment before implementation, not cleanup after launch. Treat eIDAS 2.0 readiness as a product roadmap, not a one-time legal review. Start by inventorying every signing journey, then classify each one by risk, value, and customer impact. From there, decide where stronger identity, advanced or qualified signatures, wallet integration, or trust service vendors may be needed. Phase the work into manageable releases and keep legal, product, UX, security, and vendor teams aligned as market expectations evolve. Electronic signature strategy is a business decision, not just a technical feature. Match the signature level to workflow risk, required assurance, compliance needs, and user friction. Next, we'll compare SES, eIDAS, and QES directly, so you can choose the right approach for product, legal, and operational outcomes.